Welcome everyone. Thank you very much for attending today's Great Boulder Resources Investor Webinar. My name is Nicola Gazzatti of Investor Relations Consultancy Corporate Storytime. Great Boulder Resources is a mineral exploration company with a portfolio of highly prospective gold and base metal assets ranging from greenfields through to advanced exploration located in Western Australia. Great Boulder today announced an update to the mineral resource estimate for their flagship Sidewell Gold Project located in Meekatharra, Western Australia. I am delighted to have Great Boulder's Managing Director, Andrew Patterson, with me today to run through the highlights of today's announcement, which we will then follow by a Q&A session. If you would like to submit a question during the webinar, please use the Q&A function at the bottom of your screen. So without any further ado, I am pleased to hand over to Andrew.
Thanks, Nicola, and thanks everyone for joining us today. So there's quite a lot to unpack in this announcement. Obviously, resource announcements are by their very nature extremely detailed and a lot of information. I would encourage everyone to read right through. You know, there's a lot of listing rules information in there about how the resource was put together. A lot of that is by its nature technical, but it does help explain the context of this resource. Now, really, the key thing is here, obviously, this is our second resource for Sidewell for those two deposits at Mulga Bill and Ironbark. Ironbark hasn't changed very much, although the grade's increased nicely to 3.3 grams a tonne. So that's a really solid grade. And pretty much all of that is less than 150 metres below surface. So at face value, without doing any optimisations or anything, you would say that a good proportion of that is amenable to open pit mining, and we certainly anticipate Ironbark being an obvious open pit target. At Mulga Bill, though, and in fact at the project collectively over the last kind of 11 months, we've added 150,000 ounces to the initial resource, and we've converted 51% of those ounces, the total ounces, to indicated category. Now, that's great. 51% indicated is a good number. I do think that there's plenty of upside in that indicated proportion, and it won't take too much work to convert a fair bit more of the current inferred material to indicated. And really, as everyone probably knows, there's three JORC categories: inferred, indicated, and measured. They're simply a measure of resource confidence, and indicated is the first one at which you can start doing economic studies. So I did put a comment in the announcement that this is a step towards doing economic studies, but I also put a qualifier on that to the effect that we won't commence doing any feasibilities until we see the end of the current inflationary cycle. So that's really just because what we've all seen in the last few years is CapEx estimates blowing out by 30–40% between when they're estimated to when they actually get built. So obviously we want to try and avoid that. Now, the other things I'd like to talk about at Mulga Bill, the grade there is pretty good. It's actually gone up, so we've increased both the grade and the size, which is very rewarding. And part of the reason for that is that this infill drilling, a lot of it has intersected more very high grade zones, and we've been able to add definition and scale to those really high grade zones. So that's been excellent. So that gives us an overall grade at Mulga Bill of 2.7 grams per tonne, and that's well over 500,000 ounces. So we're now, I guess, in the context of our publicly stated 1 million ounce target, we're exactly 2/3 of the way there, and we're really gunning hard to be at 1 million ounces by the end of next year, but I'll talk a bit more about that later. And then the other thing to note there of Mulga Bill and Ironbark collectively is that there is a higher grade component within both deposits that, when reported at 2 grams a tonne, they've got almost 500,000 ounces at 5.3, which is really, really solid, and that's a properly high grade resource grade. So that's awesome. So yeah, I'm pretty happy with this result. I will note that it's 2 weeks behind my stated schedule. I wanted to have it out at the end of October. Unfortunately took the consultant a month to do the work, and that's just because it's a reasonably complex resource estimation challenge. And that's the only reason that it's a bit behind schedule, but I guess that's the risk of giving people a public deadline to aim to. I guess, the market's response today has been a bit muted, and that's probably reflecting the overall kind of thematic around junior gold stocks at the moment are still pretty depressed. And certainly, we're obviously well aware of that. And I guess as a gold explorer, we're extremely grateful that we've got such a good project, and that really underpins the value of GBR. So what I want to do now is slightly out of the box. I'm going to share my screen and show people some of the 3D complexity at Mulga Bill specifically. I'm not going to talk about Ironbark today, so I'm just going to actually use an old mining software that people might have seen before. This is Serpac software. It's a mine design package, and I've had this for years, and it's just quite good for showing three-dimensional stuff. So what we've got on the screen here is Mulga Bill with the west dipping veins in red, the vertical veins in brown, and this is the origin of that figure 1 in the announcement. So what we're doing, we actually, if you can imagine, you're in a helicopter and you're right over the top of Mulga Bill, probably a kilometre in the air, and this is 1.1 kilometres of strike, and the top of the page is north. So if I turn those west dipping veins off for a moment, you can see this kind of skeletal array of roughly north-south trending vertical or sub-vertical lodes. And these tend to be lower grade, but they're very persistent along strike. In some areas, there's many of them. You can see, just spinning that around, and the strike changes a bit. That's just in relation to kind of the structural regime there, and they're relatively thin, but certainly the strike persistence is pretty good. And when we first arrived at Mulga Bill, started drilling it, that's kind of what we expected to see. So we were drilling from east to west. And then we started getting these west dipping veins. So after a while, we realized that our west dipping drilling wasn't really effective. So we started drilling the other way. And you can see those here. In fact, I'll turn the east zone off for a sec. So we've just got Mulga Bill. This is the main trend, but you can see, it is quite complex. So you've got a stack of these things, and we do anticipate that there's more of these veins. They tend to be, in terms of their width extent, they're still within the same corridor, and some of them are dipping down to quite considerable depths. And put that back in plan view. At the south end here, this is what we were calling the central zone, because we had a number of other prospects further south. And up here, this is what we were calling the high grade vein area, but they both have very high grades. And then the area in between was originally initially a bit of a gap, and we didn't have much effective drilling in there. And I'm happy to say that this drilling over the last 11 months has really filled in that gap. So we've now got a continuous 1.1 kilometres of high grade resource. What we started to see fairly early on was this eastern trend out here, which is less well tested. It's still open to a degree along strike, particularly to the north and northeast. But again, you're getting those, the same structural orientation. So the only reason I'm showing this on screen is because it's an opportunity to kind of spin it around visually, and I can't display this on a page in an ASX announcement. So this is the first time I've sort of tried to show it visually. The other thing to note here is that up the north end here, we've got a Proterozoic dike cutting across, and you would have seen that on a lot of our diagrams. And that's really just a geographic marker, and we haven't done that much drilling to the north, but there's no reason why the whole thing doesn't continue to the north with the same structures. So that's a target for next year. So that's enough of that. Now moving on to the year ahead, which is now 2024, we're expecting the final approvals from the native title party for our heritage work any day now. And we've got the government drilling approvals in place with the mines department. So as soon as we receive that, we can start drilling initially the Saltbush target south of Ironbark. And this will give us initial access to that whole 14-kilometre strike along the Ironbark corridor. So that's actually pretty exciting. So what I've been saying to people in the last few months is that the two catalysts remaining in 2023 are firstly the resource update, and that's out today, obviously. Second one is the start of drilling on these new targets. And the reason that I see that as a value catalyst is because that's where we anticipate the next kind of 500,000 ounces of discoveries will come from. So we still see significant incremental growth, particularly at Mulga Bill with Mulga Bill North. That's a 700-metre zone of mineralisation in its own right. It's not well enough drilled yet to get into inferred resource, but it's probably only a couple of drill programs away from being interpreted. And once we can interpret those mineralised shapes, we can put an inferred resource around it. But really, the Ironbark trend is where the action is going to be leading into the end of this year and rolling into 2024. So that's where we're going to get the majority of our news flow from going forward. So I think that kind of wraps up what I wanted to say. As I started with, there is a lot of detail in the announcement. The key things are extra 150,000 ounces, extra grade. A lot of it is fairly shallow. Have a look at that ounces per vertical metre graph on about page 4, I think it is. And that shows, particularly in Mulga Bill, that really fat zone around sort of 50 to 90 metres below surface where you're getting a lot of metal up to 7,000 ounces per vertical metre. So that's a very, very robust resource.
Thank you so much for that update, Andrew. That was fantastic. So we'll now move on to our Q&A session. The first question that we've received is, what size of resource are you targeting before proceeding to feasibility studies for Sidewell?
Yeah, I've had this question before, and the short answer is there's no kind of perfect answer, but I guess it's kind of like a psychological hurdle, is that we would be happy to have 1 million ounces in resource and have a good proportion of that in indicated to enable us to start doing feasibility work. And part of the reason for that, well, twofold. One is that, we feel like everybody needs a fair amount of ounces ahead of them to support a long life mining operation. And secondly, once you start designing mines, you want to make sure that you know where all the best bits are. And at this stage, we just don't, because there's so many other targets to drill. So plenty of things to test before we can confidently say that we've found the best of it.
Thanks, Andrew. Our second question, how do you currently envisage a mining scenario for Sidewell?
I guess it would be pretty conventional. So starting with open pit mining. For things like Ironbark, that's an obvious open pit target, very, very simple truck and shovel operation. And really, we would like to find another kind of half dozen of those. And Ironbark, as we've said before, is very simple ore body, simple deposit, easy to mine. Mulga Bill does have more challenges, and one of those, firstly, there is a depletion zone that varies from kind of 10 metres down to, as you see on the long section in the announcement, down to 66 metres, I think, to the top of the deeper bits. So you have to develop a reasonably large open pit to get down to that. Once you're down there, though, into that super high grade mineralisation, that's the payback. So there's two things there. One is the open pit itself at Mulga Bill, which we would obviously anticipate you wouldn't mine that unless it was cash positive, and we don't obviously have any feasibility studies on that, but we have done some internal work that indicates it can pull a pit. I don't want to go into any details on that because I don't have facts to support it. But the other aspect of mining a pit at Mulga Bill is you can then use that as underground access to put a portal into fresh rock and go down and get the deeper stuff. So we think, previously when we looked at Mulga Bill on the inferred resource, it looked like it would pull two pits, one at the high grade vein zone and one at the central zone. So we're now hoping that it will pull one big pit down right along the whole thing. So that'd be a pretty large open pit, more than 1 kilometre long.
Thanks, Andrew. Our third question that we've received, what work is likely to occur at the Irahidi Basin Project, Wellington, over calendar year 2024?
Yeah, so Irahidi, it is on a kind of slow burn trajectory, and that's really, I've commented before that we're very open about the fact that we use Rumble as our kind of case study. And to be honest, we've observed the fact that Rumble have been beaten up in the market. Their share price is suffering. And so we're not in a hurry to do too much work at Irahidi, because we assume that indicates market conditions are pretty soft for zinc and lead. However, we have done some initial soil sample collection up there with a contractor in the last few weeks. We actually have those samples in Meekatharra. We haven't submitted them for assay yet, but that's our first work. We'll now analyse those samples and see what anomalies we get out of that. Probably go back in and do some infill soil sampling, and then later on use those to target geophysics and particularly gravity surveys. Depending on how big the areas are, we'll either do airborne gravity or ground-based gravity if they're smaller. So that'd probably be the bulk of the work for 2024. I guess if the base metals market really starts to speed up, then we could accelerate that and get drill targets and get drilling on Irahidi, on Wellington within the year. It shouldn't be too hard. We've done all the initial heritage work, which was probably the first hurdle. Now we've got the first geochem done, so things are actually moving, but we're not spending too much money on it.
Thank you, Andrew. Our next question, how much capital would be needed to start an open pit mine on the Ironbark deposit, and how could it be funded, and how quickly could this be done?
Yeah, that's a good question. So, firstly, assuming toll treatment or some other access to an existing mill, that would most obviously be the Bluebird mill because it's quite close. Then that obviously removes the biggest capital hurdle. So you don't have to build a mill. So all you need to do is build a mine. You don't really need even any haul roads because you're right on the road there. So I don't have an exact number, but I'd say it would be millions of dollars rather than tens or hundreds of millions of dollars. It would be quite cheap. Now, timing though that is probably one thing we don't really have a close understanding of, because timing is always kind of a movable feast because it's all a government process. So we do have a mining lease application over Ironbark just to get that ball rolling. That's the first step. We've also done some initial flora surveys, flora-fauna surveys as a kind of a baseline study in anticipation of requiring that for mining approvals. In terms of how long the whole process takes, I would estimate sort of 1 to 2 years, but that's based on conversations with Westgold people next door. That's kind of their experience. How far we might be down that process with the work we've done at the moment, I actually don't know. So I don't want to kind of give people unrealistic expectations, but that's kind of a very broad response, would be 1 to 2 years.
Thank you, Andrew. Our next question relates to capital raising. Can you address the options for moving Great Boulder forward beyond a raise more capital and do more drilling strategy? And are there any alternatives to this approach that won't require or at least mitigate further capital raisings next year?
And I suppose it's kind of the same answer. So Ironbark is the obvious option there. And I'll refer actually to an example from 2014-15, which was MetalsX at the time mined a pit with Southern Gold called Cannon near Kalgoorlie. And what they did there, Southern Gold owned the asset. Metals X owned the mill, the Jubilee Mill south of Kalgoorlie, and they did a 50-50 profit sharing agreement where Metals X did all the mining and shared the profit, and that worked really well. And Cannon was a nice, small, discrete, high grade ore body. So interestingly, Metals X, the gold division, spun out and became Westgold. So they're our neighbour. Some of the people are still there, and you know, we know some of them. Some of them go right back to Mount Magnet days, which is also one of my previous roles. So there's a good relationship there, and they're good operators. Now that would be one potential model of how you could deal with Ironbark, and you know, assuming all goes well, the gold price is pretty good, keep your costs down, then you could make a significant amount of money from Ironbark. But you know, getting back to my previous answer, I don't know how long that might take. That's probably the easiest way to avoid further capital raises. However, the kind of time factor is one problem. Unless you were to do some sort of forward agreement with Westgold, you know, to promise them future ounces to fund things at the moment. But I'm also extremely cognizant of not giving Westgold kind of a free kick in trying to take us over for a cheap price.
Thanks, Andrew. Our next question does relate to Ironbark as well. Has the company had any preliminary discussion with local processing plants with regards to toll treating the shallow gold at Ironbark?
Very short answer to that is no. We haven't had any at all.
Okay, thanks, Andrew. Our next question, do you have any concerns over Great Boulder's investment in Cosmo Metals and the lack of progress at Cosmo? What are Great Boulder's plans for the shares held in Cosmo, noting that the holding is coming out of escrow in coming months?
No, we don't have any concerns. In fact, you know, as I'm the non-exec director on the Cosmo board for as a GBR representative, so I work with James Merrillees there closely. You know, I speak to him several times a week, and I know James is working really hard. And the problem for Cosmo shareholders is they kind of can't see that because he hasn't had any news out until this morning. So he's got a really good announcement out this morning, which I would refer people to. But I suppose suffice to say that all the directors on the Cosmo board have been working extremely hard to try and find a nice, small, juicy project to put into Cosmo just to reinvigorate it. Simply because the Yamana sulfide assets are you know, they're not generating much interest, so there wasn't really any reward for James to keep drilling them. So he is in a bit of a bind. He's looking for a new project. We've looked at a lot of things. I won't go into any detail. I'll leave that to James to keep the market informed. But you know, we're all kind of kicking as hard as we can to keep that moving. From Great Boulder's perspective, we remain completely supportive of Cosmo and happy with it. Obviously, that investment hasn't appreciated in value, but I think there is still plenty of potential long term. And we still believe in the Yamana assets, which is why we didn't divest them completely.
Thank you, Andrew. And this is our final question for today. What is being done to prevent the company being taken over at a low share price?
Yeah, well, this is a bit of a kind of a nightmare scenario, you know, because with, you know, now 2/3 of a million ounces of high grade resource, very close to an operating mill, there's a lot of inherent value, I think, in that. And if you look at some of the comparative transactions, the one that I like particularly is the Strickland one with Northern Star, or even Musgrave Minerals with Ramelius. We're really badly undervalued and therefore vulnerable. The only thing I can say, you know, in order to sort of reduce that risk is to keep our shareholders informed, particularly our major shareholders, supporters like Cumulus Wealth in Melbourne and Discovery Capital, our two supporting brokers, and make sure that, you know, we keep everyone up to speed as much as possible, so that if someone did start to try and start sniping us, on market that people would be reluctant to sell. The only other thing we can do is try and generate value as quickly as we can, and keep the market informed about that value to try and reward everyone for share price appreciation. So it's a really tough market at the moment. I'm not going to sort of pretend that it's not. I have commented a couple of times recently that's the first time in 30 years that I've seen a downturn in the gold sector when the price is actually really high. That's kind of weird, but it just reflects the broader inflation dynamic. So yeah, all we can do really is keep kicking as hard as we can. You know, drill like buggery is one method, and we have been rewarded for that in terms of resource growth, but we also need to be rewarded in terms of share price appreciation and capital growth. I think we're pretty close to the end of this downturn cycle, and gold price could kick almost any day. Obviously, nobody knows exactly when that's going to happen. So I don't have a crystal ball, but that's all I can say. Really, we're just we're all lucky as GBR shareholders that we've got a fantastic project, and it's been extremely rewarding to explore it. We're looking forward to plenty more of that.
Thank you, Andrew, for your update. And we really do look forward to watching on with interest for Great Boulder's progress in the coming months. So I thank you all for your attendance, and this does conclude our webinar for today. Thanks, Andrew.
Thanks very much, Nicola. Appreciate it.